Everyone, welcome back to Fast Stock Market News, where I give you all the news as fast as I can. So today was a pretty lackluster day in the stock market, unless you're a retail investor, and I'll explain, guys. So we could see today S&P finished a negative 0.13% in the red. The Dow finished negative 0.33 in the red, and Nasdaq finished just about 0.5 in the green, and the Russell had a good day, finishing up 1.24 in the green. So today was a very fascinating day. You may see the indexes, and you may even see that Nasdaq with all the tech stocks might have, and you say, "Wow, today was like a pretty average day." But if you're a retail investor and you own retail stocks, today most likely was a very, very good day for you. And there's reasons for this. I've actually mentioned it in previous videos, but I'll get to that in a bit. With this in this video. So first thing is first. I wanted to say that so far the stock market has lost over $7 trillion during the past 7 months. The stock market slow crash in a way, or correction, whatever you're calling it, it's been absolutely devastating. And if you might have noticed, a lot of your tech stocks rallied today, like as I mentioned, retail stocks, and the market is a very forward-looking mechanism, and the reason it rallied today, and this is a reason you have to understand, is because what Powell said here, he's changed his verbiage. He almost kind of deserves to have like a clown face on his picture at this point, because this man right here, Jerome Powell, has gone from saying inflation is transitory to we're going to have a soft landing to the next month we are going to have a softish landing to now saying he can't guarantee a soft landing. So if you've noticed the past couple of weeks, it's been a devastation in the Nasdaq, especially for a lot more of our growth stocks. Again, retail stocks. Apple is like a big name, but I don't consider it like a heavy retail stock. More speculative stocks or retail stocks at this point, but they don't have much revenue. They don't have much profits and cash flow and whatnot. But so what's happening here is interesting. If you guys remember, I actually told you, and I literally have not seen one person say this, but now everyone's saying this. I said it several weeks ago, that the market starts to bottom, in my opinion, when Apple starts to sell off. It's the safe haven for assets, for money managers. Like literally, if they want to have a bond, they don't get a bond. They get Apple. Apple's that much of a safe stock in the stock market. However, as I mentioned in my previous video, when it's in a bear market, every single stock gets hit. And as you can see today, you can see that Apple, the most safest stock, the biggest stock in the stock market, got hit. And yesterday it got hit as well. It's down over 8%, which is unheard of for Apple to be down 8% in a week. Now, if you look at a fund such as ARK, you'll see that they did, holy crap, they had an amazing day today in the stock market. And on top of that, they're up over 2% after hours. So this is what happens basically in the stock market in the different cycles too. Like, we start off being risk off. Money managers get risk off. A lot of these stocks in ARK are over 70, 80, 90% down. Meanwhile, Apple was kind of hanging in there, being down 15%, 16%. But now it's starting to sell off, because that's the last pillar that has to fall for us to potentially go back up. Again, this is just my opinion, guys. We could still have some more downward pressure, but I think the worst selling as far as our retail stocks go, I think it's behind us, in my opinion. I think that we've seen most of the bottom at this point, and I think a lot of money managers are going to start buying a lot of these beaten down, good quality retail stocks that they've been selling off for the past 7+ months. Before I go, guys, I just want to show you this video. It's basically kind of my theory, but being able to kind of be verbalized a lot more coherently than the way I say it. But take a look.
Ari, why is Apple a tell, William?
Well, and unfortunately, that list of stocks down 20% from its peak go much broader than just those 5 names. It's really a market issue that we have going on here. I think there is a lot of attention paid on Apple for the simple reason of its market cap. It's 13% of the NASDAQ 100 composition, 7% of the S&P 500. So we can quantify how important it is to the overall market. And it has been the next to surrender lower. Looking at the chart of Apple, it has fallen below its 200-day average. The support level I'm watching, $138. You got to go back to the stock's late 2020 peak. Very often, former resistance becomes support. Even though we're touching it pretty close to it right here, right now, again, given the damage in the trend, this stock needs to stabilize.
Okay guys, thanks again for watching, and I'll see you guys next time. Take care everyone. Thanks again everyone for watching Fast Stock Market News. If you enjoyed the video, consider subscribing, commenting, or liking the video. I would greatly appreciate it. My name is Gio, and I'll see you tomorrow guys. Take care.